Welcome out to today's advisory report. It is July 17th, a Friday. It is 2026. As you can see, our gauges have changed. We are on a yellow, uncertain, neutral market condition. I would even say that we could probably tilt this gauge a little bit more over to the adverse side. We'll talk a little bit more about that in a bit. But price crashed through the 20-day, gapped down through the 20-day today and moved through the 50-day. The intermediate trend is still bullish. However, when you take a step back, the short-term trend is bearish. And so looking at some of the returns for today, S&P 500 down 0.99, QQQ down 1.5. So a lot of damage. MAG 7 down 1.78. We'll see how that transpires moving forward. As far as our portfolios and our strategies, affected today, ultra aggressive down 0.94, aggressive down 1.1, moderate aggressive down 0.86. We did have to play some defense in these portfolios, but the ultra aggressive is still up in its since inception time frame compared to the S&P 500. And that's one of the things that we like to see. Here's our other 1, 5, and 10-year returns for you to take a glance at. Let's go ahead and look on over to the intermediate trend. If we're looking at the intermediate trend, we can see that it looks okay. There's nothing wrong with the consolidation. We've seen this many times, and then prices sort of start moving back up. But we are cautious as things are chopping around. The gap down today, as we look at the short-term chart, really does signify that we need to just be careful of what is going on here. Let's get this out of here. Okay. If you're looking here at the chart, and I'm going to try to zoom in a little bit more, maybe if I can. There we go. So yesterday we're doing okay. We're just inside of that range that we've been it's getting tight. Actually looks very good. Just hugging that trend line, waiting for it to break up. We do the opposite. We gap down today. Gap down to this spot below the 20-day, below the 50-day, right? Price then recovers. It goes up, hits the 20-day moving average and rejects back down, closing back below 50. The end of this day, very negative as far as how this candle looks. Maybe if we had gapped down and we had closed all the way up here, we wouldn't be as bearish as we are. But we have to be cautious right now. We took some defense in our portfolios. Let's go ahead and jump on over to Market Lens really quick. We'll start out with the ultra aggressive. Looking at Eli Lilly, it actually is up on the day, 0.9%. Just not a lot of strength though, even though up 0.9%. We'll see how that plays out. CrowdStrike down on the day, not too bad. Still top wick right here, so was selling at the highest points of the day, but never really violated the lows of yesterday and off the lows of today. So still could be just some rounding pattern here. Goldman Sachs, disappointing to be honest with you. A nice movement 3 or 4 days ago on earnings, and it's given it all back, plus some. And then regained a little bit. So we'll see if that's the end of the selling, if they're exhausted. Let's go on over to SPXL. So the leverage component of the S&P 500 took a little spanking today, down 3%. We did reduce this position significantly today in the ultra aggressive portfolio. We had a smaller position in the aggressive. We reduced that. And then also in the moderate aggressive, we blew out the SPXL 3% position that we had. Made sense to. There's not enough opportunity for the trend on the upside right now to hold it in that lesser of the aggressive strategies as we have. But if this turns back up and goes, we won't be afraid to get back into that type of positioning. So that's what I got for you today. Take care. Have a wonderful afternoon. We'll be right back at it on Monday.